I'm Seth for Privacy, and thanks so much for joining us on the journey to sovereignty. We're beyond thrilled to have a place for us to chat about all things sovereignty, the why and how we're reclaiming your digital sovereignty, and to give you all a chance to chime in, ask questions, and join the conversation. Journey to Sovereignty is brought to you by Foundation, where we build Bitcoin-centric tools that empower you to reclaim your digital sovereignty. This includes our Passport hardware wallet and Envoy mobile app. Obviously, we're going to go a little bit of a different angle with this one than we have in the past, pivoting a bit from our privacy series because none of us really expected the last few days to go down like this. So today we're going to talk about why Bitcoin doesn't need banks. Really excited to jump into that. As always, I'm joined by Bitcoin Q&A, Head of Customer Experience here at Foundation, and our CEO and co-founder, Zach Herbert. But we're also excited to have the newest Foundation team member, Owen, joining us today as well. How's it going, everybody?
Hi, thanks for having me.
Going great.
Obviously, not the weekend any of us had seen coming when we scheduled this space. But how are y'all feeling after all this banking craziness over the past few days?
I was pretty stressed out on the end of last week. Luckily, we at Foundation, didn't have any funds in Silicon Valley Bank, but crazy just to think that so many startups did. But I don't know, I'm feeling pretty empowered and pumped up now. I don't know if that's the right reaction, but seeing how the Bitcoin price has responded to everything, I think is extremely validating for Bitcoin.
Yeah, I think one thing I've noticed is this is the first time that we've seen a banking collapse of this scale in the sort of true social media era. The last big collapse we had was back in 2008, and I think people are saying that this is roughly equivalent to the Lehman Brothers moment in terms of size. But what I've noticed this time around is the way in which the information is spread so quickly, and the sort of panic that's induced into certain circles so quickly, just through the very nature of just how quickly all the information is spreading from everywhere. And I was listening to another podcast I think it was recorded live on Sunday, and they were talking about the first bank collapse, and then literally as they were on there, they're like, holy shit, another one's just gone down. And we've never been in this situation before where banks are falling, and we're kind of learning about it exactly as it happens. So definitely unprecedented times, but also definitely echo Zach's thoughts around feeling empowered and feeling like a little bit smug, I guess, that this is literally why we Bitcoin to opt out of all this madness and this craziness. So I think it's going to be a pretty spicy rest of the year, and I'm sure this probably isn't going to be the last of the banking collapses. But yeah, we'll just have to wait and see what unfolds.
Is this it? Do you think it's happening?
That's the $1 million or the $7 trillion question, I guess. Ultimately, I'm not going to profess to know, and I'm sure most of us on the call probably won't either. But the one thing that I will say is the way that these types of things usually play out. I know they're not a common type of thing, but it can sometimes happen in a sort of contagion effect where one leads to the next. We've seen 3 banks go down now in the space of 2 weeks. So I think it's probably a safe bet to say that there's probably more to come.
Yeah, I think this just shows how fragile everything is. I feel like the entire system is held together by like duct tape at this point. And I think it's incredible to actually see the psychology, the human psychology of a bank run take place, and how it wasn't sparked by panic on social media. It was actually sparked by really some prominent venture capital investors, and then just kind of cascading to many VC investors warning their portfolio companies to pull their money out of SVB. I had multiple messages on Thursday night from some of our investors asking, if we had money in SVB. And it's almost like it was almost started by, you could say, like smart money or institutional capital, which I think is kind of crazy, because usually you think bank run, you think about just people generally panicking. This was very much like the venture capital investors kind of knew it was going to cause a bank run, but self-interest, right? Get your money out, get your portfolio company's money out, as fast as possible before anyone else's. And so seeing that take place, in modern times is just fascinating. And, every bank is basically insolvent, right? I mean, no bank in our system can actually survive a bank run. It doesn't really matter what assets they have on the books. And so to see this happen, I mean, in my mind, this is just like this is the beginning.
But how, personally, I've felt so safe and secure with my Bitcoin stack. I mean, everyone else still considers this the risk on asset, and I'm looking at it and I'm sleeping really well at night whilst everything is blowing up around us. I'm sure you guys probably feel the same.
Yeah, me as well. And even for the company, I mean, I think it's so cool to be able to, be a company in the Bitcoin space and hold Bitcoin, because what I was thinking over the weekend was that even if our all the banks collapse, we'd still be able to meet payroll. And I think that's really powerful.
Yeah, can anybody give kind of like a TLDR on why the bank run happened? I mean, you hit on it, Zach, on like why people started to get their money out, but why did people feel that there was an urgency to get their money out? Maybe Owen, you have a little bit more to add around some of the financial background there. I know I don't want to go too in depth into that because I want to focus on kind of actionable things here, but I think a TLDR is really helpful.
Okay, I can give my recap of what I understand happened. Maybe Zach has some more input as a founder and a CEO. As I understand it, the bank threw a ton of money into bonds because that's a safe place to keep hold of your reserves. And then over 2022, the Fed hiking has meant that the bonds are now worth significantly less. And because they're a venture capital heavy bank, all of their customers have been kind of draining money out over 2022 as they've been trying to make their payrolls and so on and so forth, covering bills. And then we reach this point now where there's suddenly there's no cash reserves left. And if you were to sell some bonds to recoup some so you can continue funding your deposits, they're all coming at a massive loss. So this is sort of the Fed's doing through and through. But that's my understanding.
Yeah, I think you got that right. And more specifically, SVB had to sell a bunch of assets at a loss, at a multi-billion-dollar loss. Then right after they did that, they went out to raise more capital in the form of equity and debt, and that spooked a lot of people. That spooked the markets. And then some of the more prominent venture investors that watch that stuff saw that maybe SVB is insolvent or at risk of becoming insolvent. And then they urged their portfolio companies to pull their money. So I think it was really just a loss of faith in the bank. You see that they just liquidated a lot of, assets at a loss. And then they immediately went around to turned around to try to raise money. And that sends a signal that that they are potentially in trouble. And as soon as that happens, and then you pull your money out, and more people pull their money out, it starts a bank run. So I think that's a good short summary of what happened.
Yeah, I think the other interesting fact that I've come to learn over the course of this whole 2-week debacle is in the financial industry there's this thing called FDIC insurance, where this FDIC company or body will offer insurance to all account holders up to a certain limit. I believe in the US that's $250,000. So if you've got that amount or less in your bank account and the bank disappears through mismanagement or whatever reason, the FDIC will make you whole again. The interesting thing that's come to light on top of that is that the Fed has said that they're going to make all depositors whole, regardless of the amount that they've got in their bank. And I'll give the listeners one guess where that money is going to come from. I presume they're just going to switch on the money printer again and essentially just socialize those losses, so that they're going to dilute the money supply, make all of the depositors whole, which I'm sure they'll be very glad about. But they're essentially just socializing those losses, and the whole economy, and anybody else who holds dollars is going to be paying the price for that through this bank's mismanagement of their assets under management.
Yeah, I think the mechanism is actually a little bit more complicated, but I think what you said definitely holds true, especially if we see this contagion spread to more banks. We've had a lot of people went on TV, to kind of defend the administration and FDIC and the Fed and Treasury and so on, and say that that these costs will not be passed on to the actual consumer or the public. that instead it's going to be increasing the costs that banks pay to be part of this FDIC system. But I mean, come on, ultimately it has to be passed on to, to the public at some point. Maybe that's in the form of, higher fees or lower interest rates in your bank account than you would have gotten at some point. But FDIC only has a couple $100 billion in it. So if we saw a bunch more banks fail or larger banks fail, I mean, the money's going to have to come from somewhere, and ultimately it comes back towards, inflating the money supply.
Yeah, it either comes directly from us through banks costing more or through inflation. And usually it's lately through inflation, so that people kind of miss the boat on where that money is actually coming from and don't view it as something personal, even though their dollars are losing value. So thanks for diving into a lot of the kind of the background there, because I think that is helpful to set the stage for why we need Bitcoin and what Bitcoin can do in situations like that. And obviously Bitcoin was built from the ground up to stand on its own. I mean, and when we look at the Genesis block, Satoshi put the headlines about the last bailouts because he was building Bitcoin and shipping it to the public as a response to the 2008 financial crisis. But how does Bitcoin actually help to protect us today, even without access to banks or centralized exchanges? Because most people's familiarity with Bitcoin, at least when they're new, is they come in through centralized exchanges, they wire in money from their bank account. It's very connected to the legacy system. But how can Bitcoin help us even if banks are failing, even if we're unable to access a bank account?
Yeah, I think the obvious one is that, if you buy some Bitcoin and take it into your own custody, then you're opting into a system where there is a known fixed supply of Bitcoin. Everybody knows that there's only ever going to be 21 million Bitcoin, which gives you sort of a checks and balances on, the amount of Bitcoin that you own now is going to be a certain percentage of the total possible Bitcoin that can ever be created. And that can give you some checks and balances and some assurances versus today when, let's say you've got, $10,000 in your bank account, and that could be X percentage of the total circulating supply. Obviously, it would be impossible to actually work that number out, but, I'm just trying to use an analogy. And then, in 10 years' time, the Fed or whatever world government has free will essentially to go and print as much of this as they like, to essentially just dilute you such that your purchasing power to buy cars, food, anything to just live just gets eroded slowly over time. Although I say slowly, I mean that's starting to happen much faster. So that's a key one for me. Just buying into a fixed supply asset that so long as you uphold the rules of Bitcoin and everybody else around you agrees on those rules, then you're never going to be your wealth can't be inflated away relative to the amount of Bitcoin in existence.
And that's just the debasement stuff, right? I mean, you practically speaking, you can't really self-custody your fiat currency. You can have some physical cash in your house, maybe, but if you want to transact on the fiat network, self-sovereignly, well, you just can't. Like you can't run a Visa node. You can't. You have to go and ask the bank's permission to send to other bank accounts for you. So there's just no. You can't do it without them. It's not a feature of the system. Whereas if you compare it to Bitcoin, I was moving some stuff around over this weekend whilst things were blowing up, and it's amazing how simple it is. I'm self-custodying the coins. I'm moving them with my own node, communicating with the network. I didn't need anyone's permission or help whatsoever. It works 24/7 all the time, no problem. It's once you come over to this side, anything else seems really backwards by comparison.
The cash one's a great analogy. Where society today is slowly eroding cash from most countries. It's better in some places than others, but that really is the last bastion of hope of the fiat system. Is cash is great in terms of private being able to operate privately, even more so than Bitcoin, some may argue. But yeah, that's literally your only option to be able to transact in a peer-to-peer fashion where you don't need to go and ask for permission from, Bank X to say, can I send Zach some money? And unfortunately, as great as cash is, it's been eroded away, and the limits at which you can withdraw what is essentially your own money from a bank in terms of physical cash is getting more and more difficult. It's the thresholds before they start asking questions are almost stupidly low in most countries, especially the Western ones these days. So that is a war that's slowly being lost, unfortunately, which brings us onto Bitcoin to be able to act as a digital form of cash via the various methods that Owen's just covered. So yeah.
Yeah, I love that focus on digital cash. I mean, that's kind of the meme or the narrative that hits home most for me. And in situations like this, like cash is king in crazy financial markets, but the ability to have digital cash that's not under control of any sovereign nation, that's under our complete control, is a huge piece of that. But I think a lot of people, especially when they approach Bitcoin from an investment perspective, can view it as very similar to stocks, and that they can just buy it, have it on an exchange, and they treat that as an asset that helps them in times of financial crises because potentially it's not correlated with like a broader market collapse or the stock market or those sorts of things. But I think there's a really fine line between Bitcoin as an investment vehicle and Bitcoin as an actual tool for opting out of a broken system and as a tool that can help in financial crises. And I think self-custody is a really big piece of that. But what kind of stands out to you as far as how important self-custody is when we think about Bitcoin as a tool to opt out of these kind of failing bank systems?
Yeah, I think if you're not self-custodying your Bitcoin and you are just using it as kind of, let's say, an investment vehicle, analogous to a stock, where you would typically leave that with a broker, the Bitcoin version of that would be leaving it on an exchange, then you kind of relinquish all of the great powers that Bitcoin can afford you in terms of censorship resistance, not being able to be inflated away, and you knowing exactly how much of a percentage of the network that you're fully in control of. If you're not fully in control of your Bitcoin private keys, then you don't have any of those powers. You're kind of passing them off to whichever exchange or custodian that you're leaving your Bitcoin with. So you can essentially look at Bitcoin as a stock when it's treated like that, which might be great for certain people. But what I would say to that is that it's great until it's not. We've seen countless amounts of Bitcoin exchanges go down for various methods, be it through mismanagement or theft from the founders, whatnot. So yeah, like I say, that approach works great until it doesn't. So we've seen time and time again that unfortunately self-custody is the only way that you can assure that this doesn't happen to you. So super, super important.
Right. I mean, the time when you really need it to work is the time when things are under great stress. And so that's the time where it may not actually work. Your exchange just may just cancel your account or refuse the withdrawals or suspend withdrawals. We saw a lot of this over the last year. I think a lot of people find it really intimidating, the self-custody stuff, and actually interacting on the network natively, if you will. But it's just not at all. I mean, I also was like that once. And then once you start out using it, if you can get over the hurdle of, okay, I need to look after these private keys, I have to protect this secret, because the secret is the money, basically. Once you make a peace with that and figure out whatever way to do that you're comfortable with, and you start actually using the network, it actually works great. I mean, it's incredibly relieving, I guess. Or you set up your transaction, you can see how it's going, you can see what's happening with it. It's been broadcast, it's in the mempool, it's waiting, it's 3 blocks away or something. And then you compare that, you go and make a bank transfer after that, and you try and log into your bank account, hope you haven't been locked out. You request to make a transfer, hope they don't deny it. You send the transfer, it's going to get through at some time in the next 3 days. Where is it? Don't know. Is it completed yet? Don't know. Just have to wait and see. Is it going to bounce? I don't know. What are the fees? Are you sending it overseas? It's expensive. So it just, once you've kind of gotten over that hurdle and started self-custodying and using the tools yourself, it was such a breath of fresh air to get used to it. The Bitcoin system works really well. I'm trailing off. Bail me out, Zach.
I'll bail you out. No, I mean, I think that if you keep Bitcoin on an exchange, there's not much difference from that and keeping cash in your traditional fiat bank account. Exchanges are essentially attached to the fiat monetary system. Customers on exchanges hold a balance both in Bitcoin or crypto and in fiat. And so even if an exchange is holding 100% of its Bitcoin and crypto deposits in reserves, which we hope that's the case for, large ones like Coinbase and Gemini, and so on, but was supposed to be the case for FTX, and some of these others that obviously were operating at fractional reserves. But even if they are holding 100% of that Bitcoin in reserve, if they get cut off from the banking system, or if there's some kind of banking collapse or bank run like we're seeing now, and it's something that, is maybe is, instead of resolving over the weekend, takes weeks or months to resolve, or for FDIC to kick in because it drains all the funds in FDIC and so on, it's very likely that the exchange is going to cut off your Bitcoin withdrawals as well. They're gonna have customers they have to cover who have fiat that's cut off, and are they really going to just let you withdraw all your Bitcoin and kind of drain all the money out of their account? So I think that if you're concerned about what's happened in the last few days, and you're holding Bitcoin because you think that Bitcoin, I think rightfully so, is going to protect you from this and was designed for this, you should not be holding it in an exchange.
I think the you mentioned fractional reserves there with cryptocurrency exchanges, which is probably a commonly accepted fact that some of them or most of them are probably running at some form of fractional reserve. We could all probably make guesses at somewhere between 50 to 80% to compensate for some apocalyptic days, maybe where they get heavy withdrawals. To draw the analogy between that and the current fiat debt-based system, where specifically in the US, that these banks have a 0% reserve, and that's fully legal, just really paints a picture as to how volatile and fragile this whole system is. That you get a couple of unhappy customers or get freaked out customers that want to start withdrawing their cash to jump to quote unquote the safety of cash or to a larger bank. You can quickly see. You can see easily how this can quickly unravel and unfold and just turn into a complete apocalyptic breakdown of the whole banking system when they just have zero reserves.
Easily. And if I had to guess which Bitcoin or crypto exchanges had full reserves, I would say number one, River. I think absolutely has full reserves. I would say Gemini probably does because of how regulated they are in New York. I would say Coinbase probably does as well. But you never know if one of them makes a mistake, right? There was a pretty in-depth article, I think it was in Forbes or Fortune or one of those publications a couple of years back, detailing how Coinbase stores their cryptocurrency, and they have all these physical printouts with QR codes distributed in multiple locations, and they have their own system. And so you never know. You could have a malicious employee or multiple employees. You could have government step in to freeze withdrawals. You could have an honest mistake cause, a loss of funds, or, just a great example is how Mt. Gox was hacked. And then, that kind of led to the entire collapse. And so even if you trust the exchanges, I think there's always a high likelihood that things could collapse. And even if they have all their reserves, I mean, a lot of exchanges are holding stable coins or storing stable coins on behalf of their users. I mean, we saw USDC depeg pretty wildly over the weekend. I think it dropped to in the low 80 cents. So that's almost 20%, what's supposed to be a stable coin. So that kind of stuff happens, the rules just break down, and exchange could say, well, we're holding all these stable coins, and now those stable coins got wiped out and depegged, and now we have to freeze your Bitcoin withdrawals, right? So anything can happen in these kinds of scenarios, and Bitcoin was designed for these scenarios, but only if you store it yourself.
Right. So I think if you're not self-custodying your coins, then you are to some degree exposed to an exchange. Don't think of it as they're custodying them for you. Think of it as you're exposed to all of the potential things that could go wrong with that exchange, and their internal management systems, like you described with the QR codes or whatever. I've never heard that before. And all the legislative risk that they're exposed to, all the regulation stuff, and all their counterparties and all of that. That's who's holding your coins for you if it's not you yourself. So do you want to look after the seed words? Do you want to look after that secret yourself, or are you willing to take on that level of exposure? And to be honest, I'm starting to think the same way about fiat banks. Am I willing to have a degree of my wealth exposed to the fiat system and fiat banks and so on, where you just have to ask permission from them to be able to do anything and hope that you don't get debased, hope that you don't get rug pulled, or will you custody yourself?
Yeah. We don't need to re-implement the legacy banking system with Bitcoin. We have the opportunity to really do things different, and Bitcoin is built to do things different. But avoiding those exchanges can feel very tricky or very daunting to people. But I want to dive in a little bit into what the key alternatives today are for actually buying, selling Bitcoin, for on-ramping into Bitcoin, for bringing new people into Bitcoin. Because I think a lot of people are surprised to learn how many options there are and how good the options are today for actually buying and selling Bitcoin without having to use an exchange, a centralized exchange, without having to give over KYC info, without having to connect your bank account or wire money in, and removing a lot of the permission that's involved in those centralized exchanges. So let's dive a little bit into what the key alternatives are today for getting Bitcoin in a way that doesn't involve a bank account.
Yeah, maybe I'll start to hit on the kind of location-specific ones first that may or may not be relevant to the people listening to this. So one of the great ways that's got a slightly higher barrier to entry than some of the ones we'll cover off later would be mining. Anybody has the ability to buy essentially a specific computer that's really good at mining Bitcoin, plug that in their home, and have a slow and steady stream of Satoshis coming into their Bitcoin wallet without asking permission from anybody else. They can connect to what's called a mining pool to kind of level out those rewards for them as well. But yeah, really great way to kind of spend some electricity and get some Satoshis back. The reason I put this under the umbrella of it being quite a location specific one, if you're somebody like me that lives in the UK and you've got an electricity cost of like 50 cents per kilowatt hour, then mining Bitcoin is going to be coming to you at a significant loss. If you're somebody that lives in, let's say, Texas, and you've got 5 cents per kilowatt hour electricity costs, then mining, if you can acquire the miners at a good rate, is a really, really great option for acquiring some sats in a really risk-free way. That is also quite hands-off. Once you've got this miner set up and running, as long as it's got power, it'll sit there hashing away and bringing you in some sats. So really great way, but like I say, it's very situationally dependent on your electricity costs or how easy you've got access to some cheap energy. Another great option before I hand it over to the other guys is Azteco vouchers or Bitcoin ATMs. I'll put these under the same umbrella where you have a store that either has these vouchers or it has an ATM which looks and acts very similar to a typical ATM, except it doesn't dispense cash, it dispenses Bitcoin. You can walk up to any one of these dispensers, put in $100 of Bitcoin and walk away with $100 equivalent, or maybe slightly less to account for the fees of sats straight into your wallet. ATMs are great in the USA. They're all over the place. You've just got to be careful with the ones that you pick. Some ask for more information than others do. A great website is Coin ATM Radar, where you can just punch in your location and see what's around you. And the Azteco vouchers, again, they work very similar. You can hand over some cash to any shop that sells these vouchers and walk away with a voucher to withdraw some Bitcoin directly into your Bitcoin wallet that you're immediately self-custodying. The website for that is azte.co. And again, they've got their own map. You can just punch in your location and find out what's in the vicinity for you. Again, great in the US, great in most Western countries. The further east you go, Azteco and ATMs seem to be few and far between, unfortunately.
Yeah, I can dive in with a couple of my favorites that I've used in the past. One of the first ones that I started using to be able to get Bitcoin in a way that didn't involve KYC, and that was peer-to-peer, which, just to briefly break down what a peer-to-peer exchange is, because I don't think we touched on that, it's really just a place that helps you to communicate with other people who want to either buy or sell Bitcoin. It basically helps you find a buyer or seller, helps connect you. Usually has some sort of tools to help protect you in case the other person tries to run off with your money or something like that. Some sort of escrow or multi-sig or something. But it's essentially just a platform that helps connect you with other buyers and sellers, and you actually buy and sell directly from them, not from a central exchange, not from some pool of funds. but directly from real people. So two of the favorite ones of mine, one which I used initially is Bisq, and this one I think is one that many people will have heard the name of, maybe have played around with a bit, and it has gotten a lot better over the years. Can be a little bit of an interesting user experience sometimes, but it's a very solid tool, works well, good desktop clients, and is a Tor only tool as well, which is really important. It preserves your privacy from the other peer that you're trading with, and gives you lots of different ways to actually acquire on Bisq. And one of the beautiful things about Bisq is it's actually not even like a centralized website or a centralized tool that helps connect you. It's directly peer-to-peer, even in the matching between buyer and seller, where you're finding each other over Tor, you're publishing buys or sells over the Tor network, and actually keeping those listed, and you're searching directly between those people. So it has a bit less of kind of the regulatory risk or shutdown risk of other tools. It could keep functioning even if governments decided they didn't want Bisq to exist, because it is such a decentralized tool at its core. Another one that's a favorite of mine that is centralized in nature, and that it's a centralized website that's run by a group of people who run it as a business, is called Agoradesk. And it's a really, really good tool for helping you to find other people in your area, find people who you can do cash by mail with, who you can use Zelle to buy Bitcoin, Cash Out to buy Bitcoin, lots of different payment methods as well. But it's a very clean website. They have tons of really good guides that walk you through every different type of payment method, things to keep in mind when you're doing like face-to-face cash. It's a really good tool for being able to do that. And it's much, it's I think a lot more approachable than many of the others. But there are some really good new tools that I haven't used as much. Two of those that I haven't really touched myself are HODL and Peach. Does anybody here have any kind of more insight on the HODL or Peach Bitcoin side?
Yeah, I've been playing with Peach recently, and that's awesome. I think it's still in beta, so it's not ready to get mass adoption yet, but it works well. It's a really slick interface. It's well designed. Under the hood, they're doing some escrow multi-sig stuff. So they although they are centralized, they can't rug pull you. They have an extra key to resolve any disputes, and they do some stuff with time locks and things so that everyone is kind of protected and no one has single-handed power to rug pull, and that it's working really well. The interface is nice. It's really easy to use, so I'd recommend looking into that. We mentioned Azteco before, and whilst we move on to sort of maybe a little bit more exposure to the counterparty here, you can get Azteco. I think they have an API or something, and there's various online endpoints you can get the vouchers from without having to go to a physical shop. So there were a couple of Telegram bots and maybe some other web resellers. I couldn't give you any links right now, but it's worth looking into. That works pretty well too. Has anyone used HODL? Because I haven't.
Yeah, I'm a huge fan of HODL. I've been using them for a number of years now. This is one of the centralized website ones, similar to Agoradesk and Peach, which is they're all run by official companies. Crucially, the crucial bit here is that these companies never actually take control of the funds. They're a third party arbitrator to make sure that both the buyer and the seller are acting in good faith, but they're never in full control of the funds. So all they can do is assist if they're in the event of a dispute. Let's say that I, as the buyer, send over my fiat via whichever method that I choose, and there's literally hundreds of methods that you can choose, again, dependent on where you are in the world. Let's say I do that, and I can prove that, and then the buyer never releases the Bitcoin to me. I can prove that I've sent the fiat. HODL can work with me because they're that third party in the multi-sig wallet. Say they'll check my proof and go, yep, Q&A sent that fiat. So I'm going to sign with the second key to release that Bitcoin, and they kind of take the seller out of it, and they can ensure that both parties are acting in good faith, such that you can go into these trades fairly confident that the worst that's going to happen is you're going to have a bit of a headache and just have to go through a dispute resolution. But I can hand on heart say in the over 2 years I've been using HODL and similar websites, I've never had to go through a dispute resolution. So that's not to say it could never happen. That's always a risk when you use these peer-to-peer markets. But I think the pros far outweigh the cons in terms of the privacy that you get from buying directly from another peer, and being able to not tie your real world identity to this Bitcoin, so that you can again leverage all of the great properties that Bitcoin offers in terms of true censorship resistance, true seizure resistance, etc., etc. So yeah, huge fan of HODL HODL, one I've been using for a long time.
One thing with peer-to-peer trading, if we go back to what I said earlier about exposure, is that over this weekend, if you were thinking, oh no, I need to buy or I need to sell some Bitcoin, and you were going to be going through a centralized exchange, you have to be worried about, has their bank gone under? Do I even know what bank they use? If I sell some coins on their platform, am I going to be able to get the fiat back out or not? Whereas if you're dealing peer-to-peer, you're dealing with some individual person just sending you some money from their account. So it's much less risky, I think, in that sense.
Yeah, I can add on to Q&A's point that in a little over 2 years now, I think, of not touching a centralized KYC exchange, only using these decentralized alternatives, I've also never had anything go to arbitration. The one trade that I lost funds in was because I was dumb and accidentally hit the button too early and sent the funds to the other person before they had actually sent me the money back. So the only time that I've had issues were just because I made a mistake and ignored the instructions and didn't use it properly. So it's a pretty solid. And one of the things also to kind of harp on to what you just said, Owen, is normally in these systems, you only release the Bitcoin or you only release the fiat once there's a proven way that you will get the other side of the funds. So that's one of the beautiful pieces of it, is you're not just depositing money on an exchange and hoping you can withdraw, but essentially both sides either get the funds or they don't. And in worst case, there's an arbitrator that steps in that helps to decide how funds should be dispersed to the two parties. So it's usually even a more foolproof system in the case of a kind of a failing banking scenario or something like that than a centralized exchange, because you can be more sure that you either will get your money or you'll get to keep your Bitcoin, and there's not this limbo period where you've sent Bitcoin but you have no idea if you're going to get your money back. The next thing that I want to chat about is really one of the things that I focus on in this space is how can we be Bitcoiners of action? Like, how can we take steps to help both ourselves and the people around us actually benefit from Bitcoin? And so I want to chat about how we can help to make Bitcoin act as a hedge for ourselves and those around us at times like these. Because I think there are a lot of ways that we can actually pitch in and do something to help spread Bitcoin rather than taking a selfish, I'm protected, let everything burn to the ground approach that I think can be a tempting attitude, but I hope that we can stay away from and stay focused on trying to help as many people as possible opt out of a failing system.
Yeah, I could kick it off with the circular economy piece. The biggest thing that I like to do to be able to kind of drive Bitcoin adoption and to indirectly onboard others into the Bitcoin space is to spend Bitcoin as often as I can. And I know that's somewhat of a swear word to that there's a heavy weight on savings and using Bitcoin as a savings vehicle in recent years, which, don't get me wrong, I do save in Bitcoin. But I do think that as Bitcoiners of action, like you said, Seth, we should have an obligation to spend Bitcoin wherever possible. So if you're making a purchase from a store and they offer to pay in Bitcoin, then we should take that option, and show that seller that them offering Bitcoin as a payment option is a good thing to them. And hopefully, if they start to see a growing number of people and customers doing that, they'll want to, investigate Bitcoin a little bit more, maybe start to hold onto it rather than immediately shipping it off for fiat at an exchange so that they can pay their bills. And if we can continue to drive this circular economy, and the store that is accepting Bitcoin there, if over time they start to see the benefits of it, then they might start then to start asking their suppliers if they will take Bitcoin, so that they don't have to go back through the fiat banking rails and pay all the fees to then restock their store, whatever it is that they sell. And then it starts to come around full circle, and then it moves on to the next person. So the supplier starts to see the benefits of Bitcoin, etc., and we start to drive this circular economy where Bitcoin doesn't go to an exchange and then back out to somebody else who's buying some. It just goes from me to it flows like actual cash does today. And I think that's going to be huge, such that if we can get to a small percentage of people doing that, we remove ourselves even further from the legacy system, which has been somewhat of a crutch, definitely in this bootstrapping phase where we're kind of reliant on centralized exchanges to onboard the quote unquote normies, where if people are part of this circular economy that they might have a small online store that earns them some sats, they don't need to go to a centralized exchange to obtain them. So yeah, big on circular economy.
Yeah, just to harp on that a little bit more, I think that if we don't build a circular economy, we kind of get stuck in this three-legged race scenario where we're tied to the fiat system in order to actually be able to use Bitcoin. Because even if we have Bitcoin, if we're self-custodying it, if we're doing all the right things, if we can't actually spend it for goods, if we can't actually trade it for services, we're going to have to convert back to fiat every time we want to do that, and we're going to have to keep ourselves tied to the system, which just ends up exposing us to a lot more potential harm as the fiat system fails and struggles. So if we want to really be able to benefit the most from Bitcoin in kind of a failing bank scenario and a failing economy scenario, we have to have a circular economy and able to be able to do that. So I love all the things you mentioned, Q&A, about how we can help to drive that, because ultimately that will make our Bitcoin much more useful regardless of fiat price or anything like that, because we can actually trade it directly for things, which is a huge piece and something that I love seeing more of the Bitcoin community, I think, reawakening to in the past year. So it's something that we definitely need to drive. The only other little one that I'll add is just that these different peer-to-peer exchanges that we mentioned, one of the potential difficulties is that when you go to buy or sell, you have to be able to find someone who's willing to buy or sell at whatever price you want. So liquidity can be an issue potentially. So one of the ways that we can help is if maybe we need to sell a little Bitcoin every month to use fiat, or maybe we just want to be able to do it as a service to help to onboard other people. An important key piece can be being that on-ramp into Bitcoin, being willing to trade some sats for fiat in order to help to spread Bitcoin adoption through these peer-to-peer exchanges. I think that can be another way that we can kind of help out and help to drive Bitcoin forward and make it more resilient, to improve these peer-to-peer exchanges. And the last little way is just really to promote and educate the availability of these tools. I think a lot of times these tools don't get used just because people don't understand that there are options out there, that they're actually pretty straightforward to use, that they're actually pretty low risk. So I think a lot of it is we can just kind of talk about it more, spread more awareness on how we can use it. The last question I had for you before we dive into open Q&A is just, if someone is entirely new to Bitcoin and waking up because of this banking collapse, which I definitely think this is one of those scenarios that will open people's eyes to the need for Bitcoin or for alternatives. What would you say to them? Like, how would you onboard them to Bitcoin and help them to acquire and use it, if they're coming in from this banking collapse and then looking for ways to opt out?
I don't know about getting people onto it. I've never been very good at orange pilling, but I think the current climate is really selling the importance of self-custodying, like we talked about earlier. Like, are you self-custodying your fiat? No, you're probably not, because you can't really. But there is now an asset where you can do that, and you can transact with it, and with Lightning and so forth, it can be as easy as any other currency system. So I'd probably start there. That seems to be the most prescient point at the moment. What else do you guys think?
Well, I think also just reminding the history of Bitcoin and how it was, created in the wake of the 2008 financial crisis and created in response to banks failing. And now that we're living in an environment where banks are failing, I think it's a pretty compelling argument to say, that you should at least hold a little bit of Bitcoin just in case, you are disrupted or cut off in some way from the current banking system. I think you can sleep much better knowing that, if you have a little bit of Bitcoin in self-custody, at least you can spend that if there's any problem. You don't have to line up outside your bank.
Right. You don't need anyone's permission or anybody's help. It just works all the time, there for anybody who wants it, which is pretty amazing, really.
Yeah, and I think in a lot of ways we can go back to the cash or digital cash analogy, where you may want to keep some cash so that you have a way to transact in fiat in case you can't get access to your bank account or something like that. And you can really treat Bitcoin in a similar way to keep it stashed away, hopefully understand the tools and how to actually use it when the time comes, but keeping it as that kind of rainy day scenario is definitely an approach there. I think one that has been helpful that I've seen the most success with, kind of broadly with people starting to want to dig into what Bitcoin is or what this is all about, is just being willing to give some away for free. I mean, even just a little bit, helping someone to download a simple, easy to use wallet, sending them some sats to show them what it looks like to send, what it looks like to receive, what it looks like when you actually have Bitcoin in your wallet. I think that can make it a lot more tangible for people than it often would be otherwise. And it helps them to get started without the hurdle of having to approach an exchange, of having to buy some from some random person or something like that. It can really be a powerful tool to get them on, to get them started. And hopefully you can take them under your wing further from that. But if it's just really a one-off meeting, can kind of connect them with some resources, give them a few sats to show them how it works and kind of go from there.
Yeah, I think being open and honest about some of the trade-offs as well. Don't try and paint this as as wonderful and as great as Bitcoin is, and we're all listening to this knowing all of the stuff that we've been talking about. But be open and honest about the trade-offs and the risks in terms of what happens if write down these 12 seed words. Once they're gone, they're gone. Or if I come into your house and steal them, your Bitcoin's gone. That's going to scare a few people off, and maybe those people that do get scared off are not ready to take self-custody. But the people that you are open and honest with and still get over that hurdle are the types of Bitcoiner that we want and that we need to help us drive this movement forward. So I used to try and shy away from this and make things, look at custodial options maybe to make their onboarding super smooth. But what you're really doing is kind of kicking the can down the road and lying to them and entering them into the space with what looks like Visa 2.0, which is the exact thing that we're trying to get away from. So be open and honest, and be forthcoming with the truth about the trade-offs of using this thing. With great power comes great responsibility, and sometimes that means that you need to sit down and bang your head against the keyboard or against your phone for a little bit until you figure this stuff out.
You're right. It's two-sided, isn't it? There's, like you said, on the one hand, if you lose these 12 words, then your money is gone. But on the other hand, if no one else has those 12 words, then your money is safe forever and no one is ever getting off you. So yeah, I think being upfront and honest about the trade-offs, these things are strengths as well as weaknesses. It's just a different system. It's hard to wrap your head around, but once you've kind of gotten into the groove a bit and you understand how it works and you have a model in your head of how this thing works, you can use the strengths. It's not just weaknesses, but it's not all roses either, like you said.
Awesome, guys. Well, thank you for diving into all of that. I love being able to focus on more actionable ways that we can actually approach Bitcoin in times like these. I mean, obviously there's tons of people doing really good education in the space as to like why these banks are failing, why all of this is happening. But ultimately, we need ways to be able to actually take steps that help us to actually be prepared. And I think covering these kind of peer-to-peer exchanges, miners, or the ability to mine to acquire Bitcoin, things like Azteco are really, really important. So the people are aware of the ways that they can get Bitcoin or sell Bitcoin without having to deal with their bank account in case a bank is failing or something like that. Thanks for jumping in for this episode of Journey to Sovereignty, and I hope you'll join us for our next live Twitter space every other Tuesday at 2 p.m. Eastern, 7 p.m. GMT. Joining us live gives you a chance to listen in, participate, and get your questions answered on the spot. Follow us at Foundation DVCS on Twitter to keep up with the latest news, get notifications when we go live, and much more. See you at the next one, and thanks for joining us on the Journey to Sovereignty.